Let's get rolling. Here's what Garnett is speaking about. I did a couple of test emails. I've been waiting for this for quite a while. It seems like the back office finally has found a way to help me get announcements and recordings and things like that out to you as a whole group. So hopefully that's something that I do a little bit more regularly, or minimally once a week, right? After these sessions. Hopefully it works out that I'm able to send you the recording on a weekly basis. Particularly for those who were not able to attend. Angela, I'm glad you like that too. All right, let's get to it. Here's what I'll do. Since there's no other questions, no other comments, questions, or trades posted in the room, I'll just get right to the general markets. Then, thanks to Philip, let's see, is Philip here? No, Philip is not here today. But Philip has 2 trades which I am assuming are complete. And we'll take a look at his 2 trades that he's offered over the last couple of weeks. And then I probably will squeeze in the remainder of an educational topic. Once again, I think the educational topic was inspired by Philip. You got it, Vittorio. Feel free to post it in the room. I appreciate that. So Walter, Vittorio, Tal, Stephen, Randall, Pete, Fanny, Patrick, Ono, Nancy, Matt, Garnett, Chris, Chi, Brian, Betty, Audrey, and Angela. Thank you for your presence. Let's take a look at the general markets. Actually, I have 3 trades to follow up on. There was one that was mine. Here's the S&P 500 on the daily. Definitely some bearish momentum, sort of. This is where things get a little blurry. It seems like our biggest battle is with the 200. Let me grab the magic marker. And here we were for a very long time consolidating at all-time highs. Then we took this nosedive. Again, this is the overall market, the S&P 500, represented by the SPY ETF, which represents the top 500 publicly traded companies in the U.S. stock market. That is our overall barometer. So we had this nosedive bearishly into the 200, and we danced around it, a little bit below, a little bit above, a little bit below, again, reaching into it, a little bit above, a little bit below, and wham. Finally, some confirmation tearing away. And what does it do? As it unfortunately often does, it just pulls right back into the gravitational pull of the 200. So last week when we left off, we talked about the possibility of some bearish trades, really the last couple of weeks. If you wanted to take a try of the break of the 200 again, I passed on that. I did not want to battle with the 200. If some of you did, that would have been a magnificent short trade. Or even here, finally a potential of a confirmed downtrend, right? Or lower low, lower high, finally all of that was taken out, then you have your pullback. But if you did the VSS there, it probably was a losing trade. I'm going to be straightforward with you. You would have entered there short, even if you put the tightest of stops, maybe you were up 1/3 of an R, and then over the last couple of days, whipped right back. Which symbol, which we use for a major sector of the general market, was a bit more bearish? Does anybody remember what I was talking about? Something we pointed out last week, a symbol we go to quite often, usually right after the S. Exactly, Garnett. We saw a bit more bearishness on the QQQs. Now, not all the time, but I would say 8 times out of 10, After going over the daily chart on the SPYs for the feel of the overall market, I'll switch over to the Qs daily, which represents the top 100 stocks in the NASDAQ, which has been probably the main driver behind the S&P 500 for the last 15 years. So I have found it helpful to kind of look at the SPYs and the Qs around the same time and get a feel. Is technology a bit more bullish? Is a bit more bearish? Is it right in step with the overall market represented by the SPYs? Let me just finish off with one more thing right now. I would say on the general market, we're still stuck around the 200. There's definitely been some emphasis for some bearishness, but this equities market is so strong. Think about it. This is all-time highs. Yes, we turned bearish. We fell into the 200, but probably one of the more major wars in the world in many, many years has broken out. It looked like we were in for a tumble, but really haven't moved that much. So the resilience of this market is quite interesting. Who knows what happens? Who knows what happens with interest rates, with inflations, with the very sad and unfortunate war in Europe? Who knows really? But right now, this market is showing pretty dramatic resilience. The fact that it's dropped into the 200, try to break down further, and thus far has not been able to. So if you're working the short side of this, just be nimble. Actually, if you're working either side of the general market right now, just be nimble. Follow your plan, follow your risk management, follow your risk unit approach. Now, off to the triple Qs. You know what? I keep saying this, but let me do one more thing here on the S&P 500. Here, I just went out to the weekly chart. Always have, again, as swing traders, you know, we're not trading the very fast 2-minute, 5-minute. We're looking for a little bit more longer time horizons. So peeking at the hourly, the daily, the weekly, even the monthly is helpful. Once again, let me go back to that daily. I have no doubt so many of you, between world events and taking a look at this daily chart, were thinking, oh, you know, this is the end. This is the collapse. This is the big one. But all you have to do is go up one more time frame, back up to the weekly now, and it really isn't looking all that bad. Yes, we have a market law 2 confirmed break. We have a market law 2 confirmed break of the 20. This incredible uptrend, which you can see at the last 2 years here roughly, has finally broken the 20. Is that significant? Yes. Is that automatic screaming to the short side? No. No. It's just not dependable for uptrend sort of trades like VBSs and things like that at the moment. Let me ask all of you. This is a little bit tricky here. This is a little bit tricky. This is why there's a little bit of artistry here. Is there a confirmed downtrend here on the weekly? There was a market law 2 break of the 20. So the 20 is no longer dependable for the uptrend, but is there a confirmed downtrend? Yeah, I was feeling I would get a little mix of answers. So for 2 no's and 1 yes. And this is where perspective and artistry has to come in a little bit. What is the number one thing we look for? What is the number one thing we look for to give us the feeling of the downtrend, to give us the bias of the downtrend or an uptrend. The number one thing. No, Fanny, that's what we look for confirmation, but it's the 20 moving average. Take a look at the 20 right now. Has it, I'll give you three choices in your view. A, remained upwards, B, truly turned downwards, or C, pretty much flattened out. A, B, or C? Exactly. Now this is where there's the bit of artistry, but when we confirm change of trend, and this is where Fanny was going, we look for, going from an uptrend to a downtrend, we look for a new lower low and a new lower high, which were achieved, and then we look for a takeout of the lower low. So that did happen. Not everything is textbook perfect. So if you were just focused on just one of those barometers, oh, there's a lower low, there's a lower high, there's a takeout, it's not complete, because if you think about it, all of that happened in just it's really gone sideways, right? Nothing dramatic here. Yes, we formed a new lower low. Yes, it was taken out, but it was one quick tail and right back up to this sideways momentum. So on this one, I would agree with somebody if they said, oh, I see a new lower low, a new lower high in the takeout. I'm going to get a bit more bearish. Oh, okay. I would just say, just be careful, though. You're still dealing with a flat 20. You're still dealing with the last several days in a very restricted sideways range. So I wouldn't fight somebody if they said, new higher high, new higher low, I'm going to start looking for bearish opportunities. I would just say, once again, my big word today, just be nimble, because isn't that 20 kind of flat? Even though you had that textbook lower low, lower high in the takeout, aren't the bars really kind of all in the same place? So it's interesting. So the only thing I would say definitively, the uptrend is over. Does that help a little bit, looking at the chart, talking about the 20, talking about the pivots, all that sort of stuff? Yeah, we're kind of in a suspenseful moment here, right? Are the markets finally going to give out after, what's probably well over a decade, and we're really going to have really established downtrends, breaking away from the 200 on the daily? Or are we just going to rest here in a range for a while, or maybe start challenging those all-time highs again? I don't have the answer. We'll see what happens. Now let's head over to the Qs finally. I'll use the TQQQ. You could use either or. I'll give you three choices on this. This is the NASDAQ 100 on the daily time frame. Would you say, compared to the SPY, this looks, and I'll give you three choices, A, a little bit more bullish, B, a little bit more bearish, or C, just about the same? Wow, there was actually a bullish answer there. I thought it would be B's and C's. A was a little more bullish, B was a little more bearish, and C was about the same. I will go in the little more bearish club. Right. Garnett, good point. Now, let's bring it. Let me see if here. I'll do it this way. Here's why I'm going into a little bit more of the bearish club. The bigger chart is the Qs. The smaller chart inside the bigger chart is the S&P 500. The S&P 500 and the Qs were battling all-time highs. They broke down a bit and fell into the 200. They both broke the 200. But if you look at the SPYs, as I mentioned before, price action kind of ricocheted right back up to the area of the 200. The Qs, I feel, have made a second and even a third move away from the 200. That 20 seems to be a bit more established in its downtrend. So I would go in the little bit more bearish territory. I would accept about the same, but I would definitely not accept bullish. This is not a bullish scenario. What sort of IFT strategy might seem viable right now? No, a breakout is bullish, Fanny. Can't be a breakout. Like I said, I don't see any bullishness here. I'm surprised I don't have several people seeing it. There we go. Garnett got it. A VSS, right? For Randall, a sit on hands. That's fine, Randall. Sitting on hands is always a perfect strategy. Think about it. Randall is onto something. And I love the conversation at the end with Dan today. I don't know. Somebody said they did 20 trades today in the day trading room. That's being compulsive, that you always have to be in a trade. When an experienced trader, think about this, a majority of the time an experienced trader is sitting on his or her hands. The most active stance of trading is not being in a trade. The most active stance is usually being on the hunt for a trade. So I would say this is definitely a VSS, not a VSS catch play. Let's go through the 4 aspects of a VSS. Number 1, do you have a downtrend? Yes. You could say we formed the first lower low and the first lower high actually here. And then that was taken out as the 200 was broken. Then you had another move down and a pullback. Here's a VSS. Another move down and a pullback. Here's another VSS. Another move down and a pullback. Here's another VSS. Another move down and a pullback. Potential for another VSS. And as I told you last week, I was not doing the SPYs, but I've been working this. I've been working this. Been in and out a couple of times. Mostly for break even, but this last move definitely gave me a couple of R's right here. And now, here's where I am with this one. I gave it another shot here, entered here, stop over the high, and I'm currently in this trade, I don't know, 50-50 shot whether it stops out or not. If the 20 holds, it probably won't stop out. If the 20 starts getting pierced, it's over for me. But that's okay. I'm up somewhere between, working this since it broke below the 200 up 2 or 3 Rs. If the 20 gets broken and I take a loss, so be it. Is everybody with me? I wanted to get back to this. As I said, I would go over the overall market then go to the open trades. I told you last week, I shared the trade idea of working this downtrend on the Qs, and I just figured I'd report back on that. So the next thing I'm going to get to yeah, that trade's over for me, Garnett. That trade is over for me here. Right? Think about it. What are the rules, Garnett? Once up 1R, don't lose money. Once up 2Rs, go home with money, right? Does that ring a bell, Garnett? Okay. So if now this is the last trade. That's funny, Garnett. This is the last trade that's complete for me. And I'll just use white lines. I can't help myself. I have to do the color lines. Since it's a short, red. Since it's a short, also I'll use green to show the stop area. Yellow will be the risk units. Once up 1R, don't lose money. Once up 2Rs, go home with money. So at that point, I was doing the first half of the trade bar by bar. Are you with me, Garnett? Once I was up 2Rs or more, I was going to do the first half of the trade bar by bar. Okay. But no matter what happens in this trade, I have to go home with money. Correct, Garnett? Because I was up 2Rs. Still with me? Okay. So once I was up 1Rs, I'll use a white line here. I locked in break even. Once I was up 2Rs, I locked in 1R. No matter what happened, I was going home with 1R on this. Then, if you think about it, I got down to 3Rs. I'm just explaining how I did the trade. And that was at the open on that day. Well, it was actually almost immediate, not far after the open. I had decided to lock in 2Rs no matter what. So right here, I didn't even get a chance for the bar by bar. I did my 2R lock. And then since then, just curious whether the 20 would hold. So that's a very complete answer to your question. So now, as I said, the next, it's been paying off all the way down, right? This move paid off, this move paid off, this move paid off. Might as well do it again. So entry here, stop there. I did the very tight stop. All this has to do is a little hiccup upwards today, and this trade is over for me. So the IFT methodology, working these downtrends, is or the uptrends, right? It's just the converse or inverse. All right, that's the overall market. Then too bad Philip isn't here because he had two trades which I think both turned out to be break-evens. Let me find those symbols again. Give me a moment. What did I do with it? Let me see if I could remember them. LBRDK, that was it. They were both on the weekly charts. So I believe Philip did this twice if I followed correctly. Once again, let me use the colors again because I feel the colors help. Once again, Philip saw this as a lower low, a lower high, and a takeout. So he looked at the VSS here and then subsequently the VSS there. The only thing we gave a Philip heads up on was realize you're coming into the 200 moving average at some point. But Philip really wasn't worried because even if all it did was stop at the 200, he would have been fine as far as his reward versus his risk. So the first one went like this, entered here, stop right over the trade. Once up 1R, don't lose money. Once up 2Rs, go home with money. Now, without Philip here, I forgot exactly what his management was going to be. I think he did mention something about bar by bar, which meant he would have been out there. But let's say all he did was a 1R lock. He still would have been out on that trade. And the pullback, which took him out of this trade, ended up being his setup for the next trade. So let's say all he did was a 1R lock there. So that was plus 1R. Then let's look at the next VSS. Again, let me change the colors. Entry would have been here. Very tight buy stop right over that. Yellow lines representing positive risk units. 1, 2, maybe almost 3. So within the same day, think about this. Once again, I'm not saying this was his exact plan. I'm doing this from memory. If he was here, he would have filled this in. But let's say once up 1R, he locked in break even. Now this is all within a couple of days. Relatively speaking, a kind of a short swing trade, not lasting weeks, just lasting a day or two. And then once up 1R, lock in, once up 2Rs, lock in 1R. Well, right here, right within the same day, boom, boom, he was out. So in my view, working this weekly chart probably was good for about 2Rs for him. Again, I don't know exactly. He might have done something different. When he was up 2Rs, maybe he took off 3/4 of the trade. I cannot answer for him. I'm just sort of, doing a vanilla and plain approach to it, which kind of was my approach, right? I kind of just did my approach in Philip's absence. I kind of just did my approach all over. Again here, once up 1R, don't lose money, lock in, break even. You could do other things. Once up 1R, you could take off 3/4 of the trade and leave the rest of the stop. Sebastian, it's good to see you. All right, so Philip had another one. So let's say this is over the last couple of weeks. Philip shared just a couple of trades on the weekly. This one, he probably did no worse than 2Rs. The next one, again, stocks that I'm not familiar with. And I remember on both stocks, oh, Sebastian, no problem. I will send out the recording right after this to everybody. So, on both of these, for Philip, there was one thing that we reminded him of on both of these. But let me see who remembers. This is truly if you were here and testing your memory. On both these stocks, I'm going to give you a big hint. I brought up my level 2 and told him, nope, the 200 we already discussed, Garnett. But I brought up my level 2. The spread, you're in the right direction, Garnett, but it was more the low volume. This stock only does about 200,000 shares a day, and the other one only does about 300,000 shares a day. Usually not this type of stocks that IFT traders look for. And saying the spread is correct also because low volume stocks generally have wider spreads too. Not all the time, but it's kind of a correlation that holds pretty true. So here was his trade. He called this, now in my view, this worked out quite well. He called this a VSS catch play. And my warning to him was, I see what you're saying, but be careful because it was still that thing where the 20 was still pretty much flat. He saw, again, this was his interpretation, new lower high, new lower low, and the takeout. But at that time, the 20 was still flat, so we went with it as a VSS catch play. Well, think about it. Here was the trade. Again, let me change the colors. Short there. Let me just check because I do have a note on this. He used, I feel like I am off a little bit here. Give me a moment. No, I think I have it right. And his stop was there. He didn't use the whole tail or the whole wick. That's what I remember. I remember it being right under the whole number. Again, if he was here, he'd lend a little bit more clarity. So once up 1R, don't lose money. Once up 2Rs, go home with money. 3Rs, maybe 4Rs coming into the 200. If I was him coming into 200, I would definitely have some profit locked in. So maybe Philip joins us next week and he'll let us know what happened with this. So, you talk about nice and easy trading, slow trading, weekly charts that he's using. Over the last 2 or 3 weeks, he's had 3 entries, 1 on this stock, 2 on the other, and he's just killing it. He's just racking in those risk units. So let's say he has a 2 risk unit lock on this one. That's 4 risk units in a couple of weeks. Not bad. Not bad. Working this, really slow weekly charts. All right, that's all I have for open trade. So I covered the general market. I covered open trades. Oh, okay, Vittorio. So Vittorio, you have to get back to work, but now you're posting a trade. I've been waiting for your trade to appear. I figured you decided to skip it. All right, Vittorio, very well posted. Let's do this. Let's do this. Let's go over Vittorio's trade first. Wow, that was fast. Did you hang up on your boss? I'm teasing, Vittorio. You do not have to answer that question. So, now the 60-minute chart's a little difficult with me with sterling. The 60-minute charts are still a little bit funky if you remember that with those of you who use the sterling platform. There's one thing that we are not able to put on our 60-minute charts. Does anybody know what that is? Exactly. So when I trade the 60, I pretty much just focus on the 20 becomes extremely important to me, and I'll be blunt with you. I skip a lot of 60-minute chart. I skip a lot of 60-minute chart trades because I don't have the 200. So that's just me. So let me get the correct stock on here. All right, Vittorio. Well posted. Vittorio needs to tell us 6 items. Here, I'll repost the trade. Yes, Garnett. The answer to your question is yes. Garnett, That's a good question. I was told I have the clearance to start. Um, Here, let me answer Garnett's question real fast, and then I'll get to. You know what, Garnett? I'm going to do it the other way around. I'm going to go through Vittorio's trade first. Let me take things in order. Then I'll answer your question about accounts. So, 6 items. Number one, what's the stock or ETF on the equity side or currency pair, right? We do currencies in this program also. Well, it's MARA, Marathon Digital. Number two, what's the bias or direction? Vittorio has a long bias. Number three, what's the trading time frame? The 60-minute. Number four, what's the IFT strategy of VBS? And then the entry and the stop. So Vittorio told us, let me take a quick look at the coordinates he gave me. Basically, $1 from the entry to the stop. Vittorio, I'm guessing you meant to say, let me make sure I have this right. Was it 25.97 as the entry? I don't think it's a 2-penny stop. That's the only reason why I'm asking. Update the entry or the stop for me, or just tell me it's okay. Maybe it is 2 pennies. That's okay. Here's what I'm guessing. I'm guessing your entry was right here. You said yesterday, so I'm guessing this was the trigger right there. Okay, got it. I was right about that. And your stop is approximately $1 below. So it looks like it's right under the bar. Am I correct, roughly speaking? Did you put the stop roughly right under the setup and right under the bar? Excellent. Okay, let me use the correct colors. And thanks for the clarification, Vittorio, and thank you for the trade. So, entry was here. Oh, that should be a green line. It's a buy action, so let me stay true to my colors here. Green lines I usually use for buy actions, red lines for sell actions. So, green line represents the buy to enter, red line represents the stop under the setup. I would say that this is a VBS, not a VBS catch play. Once again, you could take a look at it, that higher high, higher low, boom, the takeout. So first move would have been here, second move, Vittorio's trade, and we had another VBS today. We had another VBS today. So let me clean this up and get back to Vittorio's specific trade. If the entry was approximately there and the stop was here, 1R would be visually approximately there. What should Vittorio's worst case outcome in this trade be? What do you think? What do you see? My lines may not be perfect, but they're pretty close. Right. I would agree with the don't lose money group. Break even is not the only way you can do it, but I would feel that's close enough to 1R. So Vittorio, tell me a little bit about your trade management. Did you do anything with this trade? Are you still in it? Okay. Maybe again, here, let me be really precise. I usually do not get this particular, but let me be really precise. Let's see, the top of this candle was the 2608, as Vittorio said, and the low of this candle was the 96. Okay, so a dollar higher would be 2708. Here, let me move this over. So the white horizontal line, there we go. The white horizontal line is exactly 1R. I would say this pretty much reached 1R. What is it off? A penny? So 2716 would be 1R. That's where the white line is. And this hourly bar hit 2711. So all I'm saying is this should have been something that you probably should have been out of when you think about it from an IFT perspective. Unless you said it's still 5 cents away from 1R perfectly. So let me redraw the lines. I think the lines really help us see this better. Stop here. Entry here. One R. Right about there. It missed the 1R area by pennies. I think most of us would have said this was up 1R, don't lose money. Is everybody with me? So as this bar faded back, all within that hour, you should not have turned negative from an IFT perspective. Now, again, this is Vittorio's trade. If Vittorio said, nope, I was 5 cents away from being plus 1R, I still had full risk on, I cannot debate that. But for most of us, we probably would have been close enough to 1R to say, you know what? I'm not going to lose money on this. Sebastian, you need to ask me a specific question. So, Vittorio, you did nothing wrong. You did nothing wrong. Sebastian, you don't see my writing of green lines and red lines and yellow lines? Yeah, it's working. You don't see all that scribble that I just did? Just tell me yes or no, Sebastian. You see all that scribbling I just did? Okay, Sebastian, it's on your side. Well, let me ask the room. Can anybody see my writing? Okay. Sebastian, do you see the little red X? Do you see the little red X at the top right-hand corner of your screen? Sebastian. Okay. Click on that and refresh the room for yourself. That most likely will solve the problem. Not definitely, but most likely. So we will still follow Vittorio's trade the way he's doing it. But there was also the opportunity to exit the trade for break even, which would help our batting average as a winning trade, but be neutral for our reward versus risk ratio, and just another VSS right there. But we'll follow what Vittorio's doing in a future week. So I'm going to go silent for about a minute. I'm just going to make a note for myself to follow up on this trade next week. Once again, Vittorio, thank you for the trade. Fanny, I already thoroughly went over the cues. Fanny, do you have a specific question? But Fanny, we went over all of that already. Yeah, I'll go over the last one, Fanny. Right? Well, I'll go over it very quickly. I'm not going to repeat everything. What you're probably remembering, last week I said that I felt the Qs were a bit more bearish than the SPY, and I'd be looking for short opportunities on the Qs. That's what I think you're remembering, and I went through all this. Again, I'm not going to draw the lines all over again. Already did it. Altogether 4 VSSs. Altogether 4 VSSs. This one for me was about plus 1 R. This one for me was about plus 1 R. This one was the stronger winner. What did I net there? About the plus 2. And right now, I'm in this one, which is getting very close to breaking out. Very close to stopping out. Not breaking out, but stopping out. So that's the quick recap. This is a daily chart, though, Fanny. I'm not going to sit here and just watch this one bar for the next half hour. But that was the quick recap for you. It sounds like you missed it earlier. Right. We'll come back next week. We'll come back next week and take a look at the stop out that I probably experienced on the last VSS. Okay. Let's see. It's hard to believe we've been going for almost an hour already. I have a few educational topics, basically based on questions that some of you have asked in the past. Yeah, last week I did a little bit of an introductory to one, but I was going to wrap it up this week, but Philip isn't here, and it was based on Philip's question, so I'm going to give it one more week, and it was a discussion, a tangential discussion to trading plans. He asked a trading plan question. But then, Fanny, you had a question also. Do you remember what the topic was? If you remember what it was, I'll start the discussion. If you don't, obviously it wasn't that important. What was the topic, Fanny? Sebastian, I can't help you. It's on your side. So let's help Sebastian one more time. Can can everybody see my scribble on the screen? Yes or no? Okay, Sebastian, it's definitely on your side. Sebastian, I'm definitely much closer to ending than beginning. I'm definitely much closer to ending than beginning. So those of you who can't see the yellow scribble on the screen, that means you should probably go back up to that little red X on the upper right hand side of your screen, or log out and log back in again. So now, Fanny, just give me a quick yes or no. You remember the topic? Be honest. Okay. Here's what it is. Oh no, no, just testing your priorities, Fanny. I'm just having fun with you. Don't apologize. Here's what you asked about, and here's what I said I would do a class in. Does that sound familiar? Okay. So here's how I'm going to begin that class. I will do a whole class on it. We'll talk about it, support and resistance in terms of equities, and we'll talk about it in terms of Forex. But let me ask all of you, let's start the process right now, and I'll write this down. Let me go get a Word document real fast here, a blank page. Can you tell me any support or resistance items that are recognized by IFT? Prior day's close, PDC. Okay, the moving averages. I'll call that the SMAs. No need to type in the 820 and 200. We have the SMAs, the whole numbers. Okay. Now, if you think about this, this is a group of 20 IFT traders. Most of you are in the equities program, and we only have about 3 of 7 of them. So it's now here's a follow-up question. Which ones? Good job, Garnett. So we have about 4 of 7 of them. Which one would IFT consider the most important? Let's take a vote. Almost 100% correct response. Almost 100% correct response. It's the moving averages. Why do I say that so definitively and so clearly? It's the only ones that you need to mark on your charts, right? An IFT manual, according to the manuals at IFT, you only need 4 items to have a complete chart. You need price action, and you need the 8, the 20, and the 200. So if the moving averages are the only ones that you're required to place on a chart, I would say that IFT considers that the most important out of the several of them. So I will keep this short list you gave me today, and we will go through all of them. It's about 7. It's about 7. We'll go through all of them and we'll see which ones we're missing from this. Does that sound good for a future lesson? Probably next week? All-time highs, yes, but how often do you have that, Garnett? Right? Once a year? Sure. All-time highs create a resistance area, and all-time lows. I know, you were just giving it a shot. So, you know what? I'll throw it on there as an additional one. All-time highs and lows. For example, occasionally over the last several years, occasionally you would hear Dan say, right, because we were perpetually, making new highs over the last decade. Occasionally you would hear him say, okay, such and such stock, Facebook is in all-time highs. Just be careful. There's nothing above us to stop us. In other words, we broke into what they call blue skies, all new high territory. There's no resistance above us. So shorting something like that would seem kind of foolish, since it just has open air to run up into. All right, good job, everybody. We have most of them, but there's still a couple that you're missing. Nothing earth-shattering, though. Fortunately, you got the most important one, being the moving averages. All right, gang. Nice solid hour with you today. Let me just finish off with a little bit of housekeeping. If the new system that they gave me works well, this will be the protocol going forward. Somewhere before the end of Wednesday, probably usually right after this gathering, I will send out an email to everyone in this program, and it'll include 2 things in it. It'll include a recording of today, and it'll also be a reminder that we meet every Wednesday at 1 p.m. Eastern. Now, when I say those of you who have been attending faithfully know sometimes things come up for me. Sometimes I'm needed in other programs. Sometimes personal travel, business travel comes up. But for the most part, we meet every Wednesday at 1 p.m. Eastern. So if you haven't been here for a while, and if the only reason you are here is because you saw that email from me, well, now you can put it on your calendar for every Wednesday. And you can hopefully make as many as possible. And if it's not possible, no problem. You'll get the recording. Hopefully the system works well. It looks like it worked pretty well because 2 or 3 of you mentioned the test emails I sent out. So thank you very much. All right, everybody. Have a great week. I can't wait to be, I hate to see a week go by quickly, but I can't wait to be back with you next week in the 1 p.m. hour to follow up on our trades, experience new trades together, and learn more deeply together. Again, 2 open educational topics. Possibly we will finish both next week. based on an inquiry about from Fanny. We are talking about support and resistance, and all of you did a great job in listing most of the IFT support and resistance items. And item number 2, inspired by Philip, was talking about the part of your trading plan which deals with reviewing and refining your trading plan. All right, gang. Great to see you. I will see you next week, or I'll see most of you in other programs, right? Forex program, the equities program. And as a matter of fact, before the end of this month, I know it's the very second day of the month, before the end of this month, there's going to be some exciting announcements about the Forex program that might be appealing to some of you. But again, let me not get ahead of myself. Oh, you know what? I will get ahead of myself. I've been working on this for over a year, and had some sit-down meetings with Oliver down in Medellin, and we're doing a bit of a reboot of the whole Forex program. Over the course of the next year, going to be doing a lot of updating. I'm excited about it, and for people who are not a member of it, some incredibly attractive pricing. Excellent, Vittorio. I'm glad you like this. Angela, the Forex trading room. Here's the hours of now. Here's what you're talking about, Angela. There are 2 programs at IFT where you can graduate and not have to put up any risk capital and do live trading. There are 2 programs. Every other program at IFT involves people trading their own money, including this program. This is a program where people trade their own money. But Oliver's Boss program, people pretty much trade their own money. I guess the Boss program, you could do both. You could take his Boss principles into the equities room if you want to. What else is there? Oh, the Bitcoin Club. People accumulate Bitcoin with their own money, on and on and on. There's only 2 programs where you can graduate and have your trading funded for you. One is the Equities Day Trading Program, which I believe most of you belong to, and the other one is the Forex program. Now, if you notice, I did not say the Forex Day Trading Program, because in the Forex program, we could do both. We could day trade. Well, we could actually do everything, and I teach that in the Forex program. You could day trade, you could swing trade, and you can long-term trade. Again, you have to be really disciplined in your approach, but there's definitely a way to do it in the Forex program, which is not possible in the equities program. So, the reason why I get into all that is Angela's question. The 2 programs where you can graduate and get your trading funded, trading funded for you, they both have daily trading rooms. The equities room runs from approximately 9:30 a.m. Eastern every day till 4 p.m. Eastern. The room is open for that time. There is not a moderator on the microphone all that time. There's always a moderator for the equities market open at 9:30 a.m., but many hours of the day the room is open for the traders to chat amongst themselves, but nobody on the microphone. So that's the equities trading room, 9:30 a.m. Eastern till 4 p.m. Eastern. Now, Angela, you're asking about the Forex trading room. The Forex trading room is open from approximately 6 a.m. Eastern till 9:30 a.m. Eastern. That's the hours of the Forex room. 6 a.m. Eastern till 9:30 a.m. Eastern. And there's going to be an enhancement on that in the coming weeks, but right now those are the hours. Approximately 6 a.m. Eastern till 9:30 a.m. Eastern. The main reason for those hours, Angela, about 80% of the people in the Forex program are also in the equities program. So many of the people in the Forex program love those hours. They come in, they trade in the Forex room, and then about 9:15, 9:30, they make their way over to the equities room. Very simple. So that's it. And I'm excited. I'll definitely, part of one of our sessions this month, part of one of our sessions this month, I'll go over all the new things we're doing in Forex. Because I do think some of you might be interested. Not mandatory. You might be comfortable trading your own money, but the fact that Forex can be both day traded and swing traded, I'll definitely give this room a heads up about some of the upcoming improvements in the Forex program. All right, gang. Have a great day and a great week, and I'll see you real soon. Once again, keep a lookout for the email, which will include today's recording, if you need it, if you missed a portion of it. Thanks, everybody.